You're listening to Money Talks. My name is Michael Campbell. Money Talks is brought to you by Solera Club. Solera Club is a royalty-based investment, which means you get paid first as the investor. There's no fees attached to it. And for more information, it's in the tech sector. Go to soleraclub.com. This week, reading about the controversy surrounding Melania Trump's plagiarizing a paragraph of Michelle Obama's speech to the Democratic Convention in 2008, well, unlike virtually every other member of the commentariat, I couldn't care less. I thought it may be rated a mention, but not 27 hours of nonstop commentaries by men and women whose practice of sort of groupthink casts a big shadow on their claim to original thought. But nonetheless, there is one aspect that caught my attention in both speeches. They not only talked about and celebrated hard work, they stated that any goal is achievable through hard work. I kind of heard that and went, say what? You certainly don't hear that in Canada. The concept of working hard and linking it to rewards, including higher wages, is virtually never mentioned. We don't celebrate success. Or those individuals who earn higher incomes because they work harder or many times spend a heck of a lot more time and money getting the necessary training, are more creative and innovative, took higher risks. Actually, it's worse than that. Not only we don't celebrate it, we denigrate it. For many Canadians, it's as if those people have done something wrong. A lot of the time, it's nobody gets successful without screwing someone else attitude. And of course, the top income earners, I'm talking about medical specialists who spent 12 or more years in training, racking up literally hundreds of thousands of dollars in debt, or the entrepreneur who started a business, worked 80 hours plus a week, or a veterinarian who started their own business and 20 years later may start seeing a return on their money in time, and many more. But they never pay their fair share of taxes. That's the mantra. It was arguably the main theme of the Liberals in the federal election. Relentless ads telling us that they'll increase taxes on anyone making over $200,000. Now, polls suggest that not only did the public agree, but thought the number should cover the top 10% of income earners, about $85,000. And of course, my point, no mention that somebody may have actually worked hard to earn that money. The debate over wealth distribution dominates the political agenda under the guise of social justice or demanding someone else pay their fair share, which in essence is the precursor for getting someone else to pay for services we want. I mean, I always laugh when I hear somebody demand things like free university tuition, as if any service is free. No, they just want someone else to pay. The truth is that before wealth is redistributed, it's got to be earned. I love economist Thomas Sowell's question when he says, what is your fair share of what somebody else has earned? Obviously, a lot of Canadians, they don't want much of an answer to that. Well, they actually think it's most of it. So it helps if you don't acknowledge that some people actually worked very hard. See, it's tougher to rationalize then, so it's better to ignore it. What I'm wondering today, though, is where does this lead? Maybe it's the underlying case of huge government debt levels. Persistence of deficits makes it clear that regularly we're not willing to pay for services we want from government. The implications for policy seem pretty obvious. With wealth redistribution, that takes precedent over incentives for economic growth. But the impact on society seems even more profound. I invite you to break with the mainstream political dialogue and just simply ask, what do you think the consequences for society are if we denigrate hard work and success? What are the consequences when we see virtue in doing less instead of more? These are tough questions, especially for some people, because they immediately have to fall back on some political or philosophical or ideological hobby horse. But I'm not asking about your personal philosophy. I'm saying step back. I'm asking on a more practical level. What are the implications for society? What happens to our standard of living? What happens to our level of personal satisfaction and happiness? I guess I'm asking ultimately, this is the road we're on, but do we really want to go there? Because I don't see it leading to a happy place. Money Talks is brought to you by Solera Club. For more information, go to soleraclub.com. I'll take a break. I'll come back. Michael Levy's got a couple of top stories. I'm going to start, though, with how, this outrageous, not outrageous is the wrong word, enviable severance that the head of Fox News just got. I'll talk with Michael about that and many other things coming up right here on the Money Talks Network. Coming up, I got a great big fat idea with Travis Dowell's Maxim Capital. I also got James Thorne coming up, so great show planned for you here. But right now, I got to get Michael Levy on the line because I got something. I got a bee in my bonnet. Michael, come on. We're dreaming of retirement. And then I read, I'm a loser because Roger Ailes of 21st Century Fox, the Fox News guy, looks like he's going to collect about $40 million in his goodbye package.
Mike, he is. And, the first step back I take is he's leaving because of indiscretions within Fox. He's been accused of treating female staff badly, making sexual advancements. And once Gretchen Carlson, who was one of their lead anchors, came forward and made a complaint personally against Roger Ailes, not against Fox, but against Roger Ailes, well, that just opened the dam gates, and other female employees of Fox came forward also. So my question is, besides for the $40 million that he's going to get just for a non-compete clause for 2 years to go to any other video news network, is whatever happened to being fired for cause? My God, Mike, if it isn't cause enough sexual harassment, what is cause?
No, I couldn't agree more, Mike. The number just blew me away. It's going to be interesting, though, just on the business side of things. He's considered largely responsible for the massive success of Fox News. Its ratings are bigger than any other cable news network. A lot of times in prime time, it still wins the ratings war, whether it's entertainment or sports channels. So a lot of people are wondering what's going to happen after that. And I think it accounts for about 24% of 21st Century Fox's revenues, about $1.5 billion. So there's going to be uncertainty on that side, too.
Well, there is, Mike. First of all, the projected revenue for Fox News is $2.7 billion in 2017. It's well over $2 billion right now. And he started this. He started this with a hammer, a nail, and some 2x4s, literally. Fox News from the ground up. Took them 6 years to take over from CNN as the most watched news network and the cable leader. And they say when Roger Ailes leaves, the culture around Fox is so built on him that the hit to earnings could be somewhere around $500 million in a year.
Yeah, to be fair, there's also a bit of background here, eh? We got when Rupert Murdoch, of course, owns it, but he put in his two sons there, Lachlan and James, and they've been knocking heads with Roger Ailes right from the get-go. He refused to report to them. He was only going to report to Rupert Murdoch. So, I'm not sure how that figures into this, but I don't think, at least on that side, the Murdochs are crying about this because there was a lot of tension there anyways. But I'm still blown away, Mike. Sorry, I can't get over the $40 million.
Neither can I. What a contract. And this takes us full circle, Mike. Whatever happened to being fired for cause? That in a court case, mind you, it would show a lot of dirty laundry within Fox. But why not? But I guess it's worth the $40 million.
Well, the non-compete side, as you pointed out, the non-compete is important on that. Let me move to another big money story. Of course, now we move to the Democratic convention, tons of coverage of Mr. Trump and the Republicans. Now the eyes are going to get back on the Clintons. And, talking about making a living coming out of politics. Where I meant because of politics, I guess, because it was never private sector, really.
It wasn't, and making a living, I guess, is making the kind of money that Bill Clinton made. He was appointed honorary chancellor of Laureate International Universities. That's a private group of universities. Mike, he was paid $22 million from the education industry since 2010, and his pay was $16.5 million. And that was more in the last 5 years than the annualized pay for the president of Harvard University.
Yeah, it looked like all he really did was, they put the regular sort of fluff on this. He's going to look at issues like social responsibility or youth leadership, that kind of stuff. And it looked like his only duty was to visit 19 campuses in 14 countries. That's not bad either for pay.
No, it's not, and make a couple of speeches. But what it's going to bring to the forefront is these for-profit universities, and dare I say the word Trump University, where Donald Trump has been accused very, very highly by the Democratic Party for the running of Trump University as for-profit. Donald Trump made $5 million for the running of Trump University, and the Clintons themselves have made $22 million from for-profit universities by giving speeches, by bills pay, but it just dwarfs what Donald Trump made with Trump University. Trump University, by the way, not a real university, but the fact is they called it Trump University, and I've got to say that the Clintons Trump on the pay by a big, huge amount.
Well, the other ones that we're going to hear, I don't want to go too much into this, but a lot more about is how much Hillary Clinton was paid, by people like the Bank of America or Goldman Sachs, UBS, and I think it's almost $2 million since 2013, including over $500K for that Bank of America speech. And she refuses to release the transcripts of those speeches. And I got a feeling the Republicans are going to make some hay out of that one. But yeah, I mean, who says that politics doesn't pay? It sure as heck does.
Well, consider the fact that they were penniless, so they said, in 2001 when he came out of office. And they have earned since that until then more than $250 million, $250 million. Well, good on them, but don't get up on the soapbox and tell us how pure you are until we take a look at how you earned that money.
Yeah, it's interesting. Of course, the Trump University deal is still infamously now, thanks to Donald Trump's ludicrous remarks about I can't get a fair trial, with a Mexican judge when the guy was born in Indiana, for goodness sake. I mean, really, he's the gift that never stops giving, at least if you want to have something to write about. But I was interested to see, as you just alluded to, Mike, that he only made $5 million in profits from that whole deal. It was a real estate course-related university, by the way.
Yeah, and Mike, you know what? The news media is just, this is a gift, as you said, that keeps giving every single day. I do not know what the media is going to do once this presidential election is over in November. I mean, this is just unbelievable. People are going to take a look back in history and wonder if we, in the 21st century, this part of the 21st century, fictionalized this presidential campaign.
Well, we got to leave it at that, but I still say what the media has completely missed on this, Mike, is how did this democracy end up with with these two choices? Like, what's led to this and what's coming next? Because I just find it appalling that that's the two choices in a country of 325 million people. Anyways, we'll leave it at that. We'll have more time to chat because this is going to be on the radar at least through November, as you say, Mike. Great. Have a great weekend.
You too, Mike. Thanks.
We're coming up. We got Travis Dow. We got a big fat idea for us. A couple of stock recommendations. Listen closely to this one when we come back right here on Money Talks. Time now for the big fat idea. Travis Dow joins me from Maxim Capital Management. These are the guys who've, you look at their fund since inception, and it's done over double digits. Travis, thanks for taking the time on the weekend. Let me just get right to it. What's the specific idea you've got for us today?
Hi, Michael. Thanks for having us on the show again. Our idea today is Polaris Infrastructure Incorporated. And Polaris is a renewable energy company that's currently producing and focused on expanding its production at its geothermal plant in Nicaragua. It's about a $130 million market cap company.
First thing that jumps out at me, Travis, how do you find a stock like that? I mean, I know that's what you do for a living, and Maxim looks for these unusual opportunities, but man, that sounds, okay, so it's a renewable energy company focusing on expanding production capacity, geothermal in Nicaragua. What grabbed you quickly on, the kind of methodology you use? What were the tick marks when you started to look at this?
Yeah. I mean, first off, it is actually a Canadian company. Its operations just happen to be down in Nicaragua. So we found it through a meeting with the management team, and we are looking for ideas that are a little bit off the beaten path sometimes. A part of our strategy is looking for ideas where we think we found value and a catalyst, and Polaris fits that profile. This company is relatively cheap, trades at about 0.5 times tangible book value. about 6 times on an enterprise value to EBITDA basis, so a rather cheap multiple. And we love that it's got a very visible growth runway ahead of it. 2 years of development add-on opportunities at its current assets that we think will grow power production by up to 35%. And that growing cash flow profile should allow them to keep increasing their dividend. And currently it's paying a dividend yield of over 6%, which is another thing we like about the company.
Let's come back to Nicaragua. You obviously assess geopolitical risks. What's your assessment of the country and the company there?
Yeah, absolutely. I mean, Polaris Infrastructure Fund's been operating in Nicaragua for quite some time. They have been able to repatriate their cash flow back into Canada so that they can pay dividends to their shareholders. So we've looked at it. I mean, it's one of the risk profiles we look at. Canadians need to be comfortable with that type of risk investing in Latin America. But this is a country that needs investment in its country, and it's been fairly stable from that perspective.
Mm-hmm. Okay, so we come back and it trades on the Toronto Stock Exchange, doesn't it?
Yeah, absolutely. I mean, it's rather simple. I mean, investors can purchase shares on the open market in Canada. The ticker symbol is PIF. It trades at about $8.50 a share right now. We just bought more shares in the company this past week, so we like it at current valuations. And of course, investors need to consider its place in a diversified portfolio. It's certainly not the only company we own. We own quite a few others in the portfolio as well.
But that's a great point you're making here. I'm always on about, the biggest mistake investors make is that they take too much risk, or risk that's not appropriate for them, either emotionally or in terms of their capital portfolio makeup. So you would call this an aggressive growth?
Yeah, I mean, I'd sort of shy away from the aggressive part of that. I think, an investor needs to be certainly risk tolerant with a security like this. I mean, it is an equity. It trades on an exchange. So as we know, those go up and down for a number of company-specific reasons and also non-company-specific reasons when you have things happening in the world that cause investors to move between risk-on and risk-off type of emotional states, if you will.
Sure.
But risk-tolerant, growth-oriented investors, again, you need to be comfortable with Latin America. We're comfortable from that perspective with this security. And like I said, it's a security, so it should be part of a diversified portfolio of other securities.
Just very quickly, it's a Polaris Infrastructure, PIF, on the Toronto Stock Exchange. How long should they expect to hold it? It's
PIF. I'm not sure if you mentioned that correctly. Yeah. We're thinking this is going to be a 2 to 3 year story for the thesis to play out properly. Yeah. We think you'll get dividend streams and potentially growth out of this one as well. So a good balance.
Yeah. I love it when we get to hear people like Travis Dahl, Maxim Capital, because it shows us his thinking about not just how to pick a stock, but around how does it fit for you. And again, that's great stuff. Travis, thanks so much for taking the time.
Thank you, Michael.
You can find more information on Maxim Capital by just going to Maxim, M-A-X-A-M, Capital Management at CM. Just the abbreviation, MaximCM.com. As I say, double-digit returns since their inception. I'll take a break. I'll come back. Hey, I've got the quote of the week for you. You're going to look forward to that. Also, James Thorne's coming on, Chief Strategist, Senior Portfolio Manager, Caldwell Investment Management. Looking forward to that. I got a great shocking stat for you. And, hey, which one of my comments got the most reaction? All that coming your way.